After Dubai, trying to predict the next crisis. Like overstretched American homeowners, governments and companies around the world are groaning under the weight of debts that some fear might never be fully paid back. As Dubai, that one-time wonderland in the desert, struggles to pay its bills, a troubling question hangs over the financial world. Is this latest financial crisis an isolated event or a sign of still more debt shocks? For the moment, at least, global investors seem to be taking Dubai's sinking fortunes in their stride. But the troubles of Dubai, a boomtown that, with its palm-shaped islands, an indoor ski slope, became a potent symbol of hyperwealth and greed, nonetheless have some economists wondering where other debt bombs might be lurking and just how dangerous they might turn out to be. Big banks that have only just begun to recover from the financial shocks of last year are now nervously eyeing their potential exposure to highly indebted corporations and governments. From the Baltics to the Mediterranean, the bills for an unprecedented borrowing binge are starting to fall due. And Russia and the former Soviet bloc, where high oil prices helped feed blistering growth, a mountain of debt must be refinanced as short-term IOUs come due. Even in rich nations like the United States and Japan, which are increasing government spending to shore up slack economies, mounting budget deficits are raising concern about government's ability to shoulder their debts, especially once interest rates start to rise again. The numbers are startling. In Germany, long the example of fiscal responsibility in Europe, government debt is on the rise. There, the government debt outstanding is expected to increase to the equivalent of 77% of the nation's economic output next year, from 60% in 2002. In Britain, that figure is expected to more than double over the same period, to more than 80%. The burdens are even greater in Ireland and Latvia, where economic booms, driven by easy credit and soaring property values, have given way to serious busts. Public debt in Ireland is expected to soar to 83% of gross domestic product next year, from just 25% in 2007. Latvia is sinking into debt even faster. Its borrowings will reach the equivalent of nearly half the economy next year, up from 9% just a mere 2 years ago. Like Latvia, the Baltic states of Estonia and Lithuania remain worryingly exposed, as do Bulgaria and Hungary. All of these nations carry foreign debt that exceeds 100% of their GDPs. External debt is often held in a foreign currency, which means governments cannot use devaluation of their own currencies as a tool to reduce their debt when they run into trouble. Few economists predict a major nation will default on its government debts in the short-term, immediate future. Indeed, many maintain that rich nations and the International Monetary Fund would supposedly intervene if a government needed a bailout. But how many bailouts can there be? And there are no assurances that companies in these nations, which, like governments, gorged on debt in good times, will be rescued. Dubai's refusal to guarantee the debts of its investment arm, Dubai World, may set a precedent for other indebted governments to abandoned companies that investors had in the past assumed enjoyed full state backing. I see very good reasons to be worried that at some point in 2010 we are going to see more cases of ring fencing because governments realize they can't afford to guarantee the debts of these companies, said the managing director of the Global Risk Group and chief economist of Moody's. A Harvard economist whose recent book, This Time is Different, chronicles 800 years of financial crises, said, I think right now every vulnerable country has one or two deep-pocketed backers that pretty much rule out a sudden run. But the writer said he expected a wave of defaults about 2 years from now, or perhaps sooner, when the countries now serving as implicit guarantors turn their focus to economic problems at home. One feature of the financial crisis is that some governments have taken on increasingly short-term debt. In the United States, for example, Treasury debt maturing within 1 year has risen from around 33% of total debt 2 years ago to around 44% this summer, while falling slightly since then. The United States will soon have debt problems of its own. In another couple of years, as industrial countries' own debts in places like Germany, Japan, and the United States get worse, they will become more reluctant to open their wallets to spendthrift emerging markets, or at least countries they view that way. This might spell trouble for many struggling nations. Facing a need to roll over their maturing debts, emerging markets may have to borrow at least $65 billion in 2010 alone. But while government debt may be a problem, corporate debt may set off a crisis that in some ways is already unfolding. Corporate borrowing surged over the last 5 years. $200 billion of corporate debt is coming due this year or next year. Companies in Russia and the United Arab Emirates account for about half of that borrowing. This is where the Achilles heel is. Companies in several countries face immediate tests. Companies in China will have to borrow $8.8 billion in 2010. Companies in Mexico, $11 billion. According to an analysis by J.P. Morgan Chase, Russian companies borrowed $220 billion from banks, or by selling bonds from 2006 to 2008. This is the equivalent of 13% of Russia's gross domestic product. In the Emirates, that figure was $135.6 billion, or 53% of GDP. In Turkey, it was $72 billion, or 10% of GDP. And these are just some of the examples. In Russia, for instance, the foreign debt totals more than $470 billion, but only a tiny fraction of that, about $29 billion, is sovereign debt. The rest is owned or owed by Russian companies, including state giants. The most troubling case in Russia is Rusal, the world's largest aluminum company, which owes $16 billion and has been in a standstill on repayment this year, while dealing with creditors. The Dubai World Debt Restructuring is already lifting borrowing costs for Russian companies that must repay a total of $20 billion in December. And again, well, it's very likely there will be more debt crises. There are more crises coming because there's something much bigger going on all around the world. Real change must happen for the better, and it must happen quickly or rapidly, because these are the end times, transition days. The transition is ongoing, a continuing process, day by day, all around the world.